A major shift is coming in the crypto market this week, and if you're not prepared, you could miss out on massive profits. The market is moving fast, and several key events are lining up that could cause big price swings. Whether you're holding Bitcoin, Ethereum, or altcoins, understanding what's about to happen could give you the edge to make smart moves before everyone else catches on. This week, the biggest factors driving the market include major economic updates, regulatory decisions, and institutional activity. Governments and central banks are set to release new financial reports that could impact inflation expectations, interest rates, and overall investor confidence. Historically, whenever these reports come out, the crypto market tends to react with high volatility, either surging upwards or experiencing sharp pullbacks. Timing your trades around these moments can be the key to maximizing gains. Another big catalyst is institutional involvement. Large financial firms and hedge funds have been making moves behind the scenes, accumulating crypto at a rapid pace. With Bitcoin ETFs now fully operational and more institutions entering the space, we could see a flood of new money pushing prices higher. If a major announcement comes this week from a big player, it could trigger a wave of FOMO buying, driving up the market. But it's not just Bitcoin and Ethereum. Altcoins are also positioned for major moves. With upcoming network upgrades, partnerships, and increasing adoption, some projects could see explosive price action. The key is knowing which ones to watch and when to enter before the hype builds. So, what exactly should you be looking at? Which cryptos have the highest potential for gains this week? In the next section, we'll break down the specific coins and sectors that could see the biggest pumps and why they're set to take off. Not all cryptocurrencies will move the same way this week, and knowing where to focus can make the difference between big profits and missed opportunities. While Bitcoin and Ethereum often set the overall trend, some altcoins are positioned for even bigger gains. Let's break down which cryptos could see the highest potential this week and why. First, Bitcoin BTC and Ethereum ETH remain the foundation of the market. If Bitcoin surges, most altcoins follow. With institutional interest growing due to Bitcoin ETFs, BTC could see strong buying pressure. Ethereum is also in the spotlight as anticipation builds around scaling solutions and the increasing role of ETH in the financial sector. If BTC and ETH show strength, the entire market could rally. Beyond the major cryptos, Layer 1 and Layer 2 projects are seeing growing adoption. Solana, Sol, Avalanche, AVAX, and Cardano ADA have all been attracting developers and partnerships, making them strong candidates for a breakout. Meanwhile, Polygon, Matic, and Arbitrum ARB continue to play a crucial role in Ethereum's expansion, helping reduce fees and improve transaction speed. If adoption keeps growing, these assets could see a significant price increase. Another hot sector is AI and metaverse-related tokens. With AI development booming and major tech companies investing billions into AI-driven applications, cryptos like Fetch, AI FET, Render, RNDR, and the Graph GRT could see strong momentum. The same applies to metaverse tokens like Sandbox Sand and Decentraland Mana, which could get a boost from increasing institutional interest in digital real estate and virtual economies. Meanwhile, low-cap altcoins and DeFi projects are also showing signs of life. With regulatory clarity improving, decentralized finance platforms like Aave, Uniswap, Uni, and Chainlink could experience a wave of new users and investors. These projects provide the backbone for decentralized trading, lending, and smart contract execution, making them essential parts of the ecosystem. Finally, watch for tokens with upcoming announcements. Many projects have major upgrades, partnerships, or listings happening this week. Crypto moves fast, and being aware of which projects have upcoming catalysts can help you position yourself before prices take off. So now that we know which cryptos to watch, the next question is, can you maximize your profits this week? When is the best time to enter and exit? In the next section, we'll break down key trading strategies to help you make the most of these market moves. Knowing which cryptos to watch is important, but without a solid strategy, it's easy to miss out on profits or get caught in a sudden price drop. The crypto market moves fast, and having a plan for when to buy, when to sell, and how to manage risk is key to making the most of this week's opportunities. Let's go over the best strategies to maximize your gains. The first step is timing your entry. Jumping in too late when prices are already surging increases the risk of buying at the top. Instead, look for key support levels and accumulation zones. If a coin is trending up but hasn't made a parabolic move yet, that's often a good sign of strength. Using technical indicators like RSI, Relative Strength Index, and moving averages can help you identify whether a coin is overbought or still has room to grow. Next, it's crucial to have an exit plan. Many traders make the mistake of holding onto their positions for too long, hoping for even bigger gains, only to watch their profits disappear when the market corrects. A smart approach is to scale out selling small portions as the price rises instead of waiting to sell everything at once. This way, you lock in profits while still keeping some exposure in case the price goes even higher. Another key factor is risk management. The crypto market is unpredictable, and sudden drops can happen at any time. To protect your gains, use stop-loss orders. A stop-loss ensures that if the price drops below a certain level, your trade automatically sells, limiting your losses. It's also important not to put all your money into one asset. Diversification helps reduce risk by spreading your investment across multiple cryptos. One of the best strategies for volatile markets is riding the trend but staying cautious. If a coin is pumping, don't chase the price blindly. Instead, wait for pullbacks or consolidation before entering. On the other hand, if a coin has already gone up dramatically, be careful. It could be nearing a peak, and taking profits early can be a smart move. Finally, keep an eye on whale activity and market sentiment. Large investors, or whales, can move the market by making big buys or sells. Watching whale wallets, exchange inflows, and trading volume can give you insights into where the market might be headed. If you see major buy orders coming in, it could mean that the price is about to rise. If whales start selling heavily, a correction could be near. With the right strategy, you can take advantage of this week's market moves while minimizing risk. But not every opportunity will be a winner, and there are still potential dangers ahead. In the next section, we'll go over the warning signs to watch for and the biggest risks that could impact the market this week. Even with the potential for big profits this week, the crypto market is unpredictable, and there are always risks to watch out for. While many investors focus only on the upside, knowing the warning signs of a possible crash or correction can save you from costly mistakes. Let's go over the biggest risks that could impact the market this week and how you can protect yourself. One of the biggest dangers is sudden market manipulation. Whales and institutional traders often use tactics to shake out retail investors before making their moves. A common strategy is a fake pump followed by a dump. Prices may spike rapidly, creating FOMO only for large investors to sell at the top, crashing the market. To avoid getting trapped, always check trading volume. If a coin is pumping with low volume, it could be a sign of artificial price movement rather than real demand. Another major risk is regulatory uncertainty. Governments and financial regulators frequently make announcements that can shake the market. If new crypto regulations, tax policies, or exchange restrictions are introduced this week, it could cause panic selling. Keep an eye on news from the SEC, Federal Reserve, and major financial institutions for any updates that could impact the market. A sudden crackdown on exchanges or stablecoins could trigger a short-term price drop. Macroeconomic events also play a huge role in crypto price movements. Inflation reports, interest rate decisions, and economic data from major countries can impact investor confidence. If inflation remains